Well, the Oklahoma soybean, corn, and cotton harvests are underway. So, Kim, how are prices looking? Let's start with corn.
Well, looking at corn, they've been taking a beating over the last month or so. It looked like they bottomed out. They went down to 445, somewhere in that range, back up to 454. Looks like maybe we bottomed out there. If you look at the harvest, it's 95% complete in Oklahoma. The stocks-to-use ratio is projected to be 26% for corn. That's compared to an average of 27.8. It was 25.5 last year for the world. The United States, 14.7%. Stocks to use, 12%, 12.1%. Average, 9.9 last year. So you've got about average stocks worldwide, but the United States, we've got excess corn. And I think that's why we saw the lower prices. They're slightly below average, and I think that's why maybe they found the bottom and working their way back up.
So what about soybean?
Well, if you look at soybeans, we had about an 80-cent rally in beans over the last week, down from the 12.25 level up to 13.11, somewhere in that vicinity. About 60% harvested in Oklahoma. The world soybean stocks-to-use ratio, 30.2%, above average compared to 20.75% is the average, 28% last year. So excess beans, above average beans around the world. But the United States, 5.3% stocks-to-use, average 8.4, last year 6.2. Tight stocks in the United States, and that's probably because of those processing plants that's been built, and they're going to demand those beans, and so we've seen higher prices.
So as we saw early in the show, we were at cotton harvest in Blaine County, and cotton looked pretty good there. So for producers who are actually able to get cotton into the gins, how are prices looking for them once they do that?
Well, I think that's what you saw. Is cotton is probably coming in at better than expected. We've seen the cotton market knocked off 6 or 7 cents in the last couple weeks, down with that December contract at 75.5 cents. Cotton is 45% harvested in Oklahoma. You look at the stocks-to-use ratio, 69% projected for the world, average 72. So slightly below average there. U.S., 19.5% stocks-to-use, average 28. Last year's 28.7. So lower stocks-to-use, and those cotton prices, cash down around 72, 73, somewhere in that vicinity. That's below average. So you'd expect cotton prices to bottom out here, maybe come up, but they've taken a beating because of this increased production, or above expectation on production.
What about wheat prices?
Well, if you look at wheat prices, most of wheat's been sold into this market. Looks like wheat prices have bottomed out. They got down below $6. They're back up to right above 6 in Pond Creek. You look at the stocks-to-use ratio, 32.6 versus a 35.2 average, so slightly below average on the world. The U.S., 36% stocks-to-use, average 43, below average there. So you'd expect an above average wheat price, and at $6, it's about 20% above average. So you'd expect $6 or better for wheat prices. That's what we see. If you look at the harvest coming up, you can forward contract for about 6.11. So the market's telling me wheat, it's near the bottom. It may work a little bit higher.
All righty, thanks, Kim. Dr. Kim Anderson, grain marketing specialist here at Oklahoma State University.